What's good, y'all? So this is how you could have caught 100 points trading the NASDAQ futures today. So let's get right into the chart. So here I have the daily chart of the NASDAQ pulled up. And as you can see, yesterday we had a huge sell-off, about 640 points on the index. And we sold off right into some equal lows down here, which was our current drawn liquidity for most of this week. So we did finally reach that weekly objective yesterday at the end of trading. And we also had this 1 day buy side imbalance, sell side inefficiency, fair value gap, in which the market was now trading into, going into trading today. So because of that, I was leaning on the bullish side going into today. We swept liquidity and we were trading into a higher time frame discount array, which is this 1 day bullish fair value gap. So had a kind of a bullish bias going to today. So let's kind of look at our, oh yeah, one thing I also want to point out too is that we did have an SMT with the S&P 500, right? The NASDAQ took out this low here. The NASDAQ took out this low while the S&P 500 failed to take out this low. So this validated that, you know, the market could potentially reverse at this point. So that was another added confluence. So if we go to a lower time frame, so on the 1 hour chart, you can see that we did have a few things here that we need to point out. So the first thing, we did have this this 1 hour SIBI that we were now trading below, right? So the market was trading in between a discount array and a premium array. So generally when that's happening, it's best to kind of just wait and see what the market wants to do versus trying to predict. Because at this point, you know, again, I am bullish, but anything could really happen because we do have this 1 hour bearish fair value gap as well as a 4 hour bearish fair value gap as well. So, so we also had some buy side liquidity that was resting here. So I'll go ahead and mark that. This was the highs from, these were the highs from the London session as well as last night. So go ahead and mark that here. And then we had our sell side liquidity from the Asia session lows resting below us. So going into today, I needed to see one of these pools of liquidity swept before I validated any potential entry, right? And so generally I was going to wait until 10 a.m. to take any sort of trade, till 10 a.m. Eastern or later to take any sort of trade entry or opportunity. Then the next hour, the 9 a.m. hour, the market did trade lower, and we swept our Asia lows as well as our London lows here into the still holding this 1 day bullish fair value gap. One thing I also want to point out is that we did have a hourly change of state of delivery. So last night during the Asia session, this price run took out this low. This low here, right, acted as sell side liquidity that was swept. And once any price run that takes out a low and then we close above that, that now becomes our change of state of delivery. So once we got above there, that officially validated that we were now bullish on the hourly time frame. So I was watching for us to get back up here and then retest this change of state of delivery and to continue to distribute higher. Because as you can see from this model, we had accumulation, right? Manipulation. Now I expect the market to distribute higher. Now, where can it go? Of course, we have this buy side liquidity resting here. But another target that is important to note, especially on Fridays, is our TGIF setup. At the end of every week on that Friday, if the week had been trending, as you can see, this week we had been trending lower the whole week, right? All the way from the open on Sunday, Monday, Tuesday, Wednesday, Thursday, we had been trending lower. So a TGIF setup essentially allows you to determine how far can we retrace back into the range. Sometimes on Fridays, we do like to retrace back into the range because if you think about what that weekly candle looks like, right? A weekly candle is always going to do this. It's going to open, right? And in this case, if we're bearish, it's going to open, go high, go low, and then close, right? So now this was the distribution lower. Now Friday, in general, Friday would be pushing us back higher to close. So that's kind of another way I determine what a potential target for today could be. So now how do you figure out the TGIF? Well, if you take the high from your week down to the low, 20% of that could be TGIF setup. So 20% of that, which is here at 730, 20% of this range, right, from Monday's high here. Wait, where's Monday? Here, Monday's high down to the low. That could be a good target, or even 30% as well. So generally the market can retrace 20 to 30% at the end of the week. Same thing if we were trending bullish, you could expect to retrace 20, 30% of the weekly range towards the end of the week. So that was another target I was potentially watching. So if we go down to our lower time frame, this is what the market looked like going into the 10 a.m. hour. So like I said, we did have that sweep of liquidity here. We traded back higher. And now at this point, there wasn't really anything here that I really liked. So again, I like to wait until 10 a.m. or later to take any trades. So you can kind of see the market was kind of just trading sideways here in a range. We did have some buy side liquidity resting here, which I'll go ahead and mark there, right? And of course, we had this buy side liquidity above us, right? This was that sell side liquidity. I'll remove that. And then that hourly change in state of delivery, which I can make a little thicker here. It was resting here, right? So again, like I said, I was watching for the market to get above there, come back, and then send us higher. So from here, the market we're now in that 950 to 1010 macro. We did pull back, right? We swept this internal liquidity here. And once we swept this internal liquidity, the market did have this change in state of delivery, right? On the lower time frame. So now, whenever I see that, I expect this low to hold. So this could have been a good first entry. Me personally, I didn't want to take it because I didn't like this big of a range, right? From here to here, that was, 60 points. I wasn't really comfortable with having a range that big, so I wasn't really interested. So decided to wait. We kind of traded lower, and then we did trade higher. And ultimately, the market did begin to rally, and we did tag that buy side liquidity here. Now, I wasn't convinced that the job was done at this point. I do believe that we still could have went higher. So at this point now, I was watching for some sort of internal liquidity sweep, and then like internal change of state of delivery once again. So we had this liquidity resting here, right? So we had that liquidity resting here. The market does go and sweep it right into our hourly change of state of delivery level. Remember, we were still bullish on the hourly time frame, so there was never any really reason to be looking short, even once we took this liquidity out, right? So we swept these lows. Now, if we can close above here, these series of down close candles that swept the low, that would be a good change of state of delivery that could take us higher, right? And so that was potentially what I was looking for. And this was now in that 1020 to 1040 macro, which some people will say doesn't exist. Me personally, I do think it exists. So here, with the stop loss below here, really could have entered on the retest. As you can see, we get that right here perfectly to the tick. We retest this, targeting, right? This range here. And then we also did have 15-minute SIBI as well that I want to point out here. So you can see that the market traded into this as well. So we had this 15-minute SIBI that could have been a good target as well. So going back to that lower time frame, then we essentially, where's that SIBI at here? We essentially do begin to spool higher now. Like I said, once we're in that macro, it's pretty much straightforward delivery right into that 20% of the range. And then we do ultimately go and tag that SIBI here. So that was a good trade entry that you could have taken today. I think that was the best setup of the day. We had this sweep of liquidity, change of state of delivery, all the way into our 15-minute SIBI, right? And then another good opportunity that ultimately ended up coming after this, we did trade back down. And then we did have this, whoops, went too far. We did trade back down, right? We swept this low here, this internal liquidity low. This sell side liquidity got swept. And then now, again, any price run that sweeps a low, you want to see, are we going to have the willingness? Are we going to show willingness to be able to close above that, right? So now we do come back up here. We close, come back lower one more time. And then we ultimately do make this close here. So me personally, I wouldn't take it this high up, waiting for the retest. We do come and get that here. But then we do come back down here. So you could have entered here with your stop loss below here. Really, you probably would have entered at the top of this change of state of delivery with your stop loss below this low, because this low is now protected, right? And the reason this low is protected is because we've already swept the liquidity and had a change of state of delivery off of this order block. So now that low should be protected, targeting this SIBI again, or even this mitigation block up here. So you see, we do ultimately consolidate a little, and then we do spool out of this, right? This is now in that 1050 London close, 1050 to 1110 macro, right? And then ultimately we do get some pretty clean delivery right into the highs there. So yeah, that to me was the two best trades, and you can see the logic in it. It was very clean, very straightforward. We came back and retested that hourly change of state of delivery. Where is it at? Here, right? To the tick, right? And that's how you know the market is algorithmic. In order for us to now be in bearish order flow on the higher time frame, now we would have to come and close below this opening price, because now this price run has taken out these highs. So anyways, that's all I got for y'all in this one. I will see y'all in the next one.